Good morning, everybody. Welcome, everybody, to our High Street auction, the 21st of September, and to our guest speaker this morning. Thanks for joining us. This morning, it gives me great pleasure to introduce as our guest speaker, Smital Rambhai. Smital has been in the asset management industry for almost 20 years. Thank you, Joff. Starting more recently with Future Growth Asset Managers in mid-2012. Future Growth Asset Managers are one of the largest, if not the largest, fund managers in South Africa, with assets under management of about 200 billion rand. Smital specifically is looking after the portfolio of rural and township assets under the Community Property Fund, a specialist retail-focused fund, valued at about 7.3 billion rand, across almost 420,000 square meters of GLA. This morning, Smital is going to talk to us about rural and township retail as an asset class, a defensive asset class. And he's also going to talk to us about the strategic initiative of the Community Property Fund to invest in battery storage solutions for their portfolio of retail assets. And he's going to talk about a case study and a test case that they are currently looking at the moment. During Smital's tenure at the Community Property Fund, they've won numerous awards. Specifically in 2019, one reference, the Morgan Stanley Corporate Investments Specialist Property Fund, Retail Specialist Property Fund in 2019, a number of other awards for best performing fund in the country, in South Africa. High Street itself has been privileged to do a lot of work in the retail segment. We've got a great body of work that we can reference and a track record of success in disposal of rural, urban and township retail assets. Future Growth Asset Management themselves have joined us at one or two of our auctions to bid on those assets. Time allowing, we're going to hopefully provide for a Q&A session at the end if there's any questions you specifically want to put to Smital. We do start our auction at 12 o'clock sharp as advertised, so it's just based on time allowance. If there isn't time, Smital will be here for a portion of the auction, and perhaps questions can be posed on the side of the auction if required. We will also release the video of this presentation and his slides to those that request it. But without further ado, I'd love to introduce you, Smital, to present your case today. Thank you so much.
Thank you very much, Greg, and it's a pleasure to be in Gauteng. The weather is much better than Cape Town. It's been miserable. We're still stuck in winter. So I work for Future Growth Asset Management. I head up the properties division where we currently run a fund which Greg mentioned invests into shopping centers in townships and rural areas. So I just wanted to, Greg's done a lot of the legwork in introducing Future Growth, but just to mention that, we are one of the biggest fixed interest and developmental impact asset managers in the country. We manage just under 200 billion rand of assets on behalf of majority pension funds in South Africa. And about 40 billion rand of the, close to 200 billion rand is invested in either property like the Community Property Fund, which I manage, or developmental impact assets. So we are big investors in renewable energy, infrastructure, agriculture, anything to do with the economic growth of South Africa. So, and we're also proudly a level 1 BE contributor in terms of our statistics as a company. So in terms of our mandate, we invest into shopping centers directly on behalf of our pension fund clients. And, for pension fund clients, retail shopping centers are good, stable assets that have diverse tenant mixes. So, why specifically township and rural retail has worked well for our pension fund clients for the last, I think this fund's been in existence for over 20 years, is that, if you look at township and rural retail, we've seen, we've been in the space for over 20 years, and it's been one of the most defensive sectors in the property space. And the reason I say it's defensive is that, we've seen, various economic cycles, but, when you look at township and rural retail, the type of tenants we put in these centers are very much focused on essential goods and services. Normally anchored by the big grocers like ShopriteBoxer, Pick n Pay. And if you focus on essential goods and services, it's normally quite resilient when you have an economic recession. So in terms of returns, which I'll get to, you'll see that over the last 20 years how well this fund has done, despite the headwinds we face in this country currently as well. And another factor is that the space has high barriers to entry. So I always joke with my colleagues in the industry that running a shopping center in Sandton is probably much easier than running one up in Mpumalanga, where you might not have proper water infrastructure, and you actually, as a property owner, have to figure a way out how to get water to site. And we've done various things where we've assisted the municipality fixing water infrastructure, where or even sewage lines. And so you really have to kind of work outside of your comfort zone. And look, we used to it. I mean, we've there's areas where we've not had no electricity, so I mean, we've been investing in solar, before load shedding was even an issue. So, I guess, in the space, you need to be, innovative, you need to be on the ground. And, that's why there's a lack of competition, because I'm going to be honest with you, it's hard assets to manage, but the reward is as good. And then I think there's a perception that township rural shopping centers generally have low quality tenants, and I'll demonstrate on the slide the quality of tenants you can have in these centers. And then also there's a perception that because it's in a township, the returns might not be good, but I'll demonstrate with the returns we've achieved for our pension fund clients that in fact the contrary is true. I think another important item is that transport infrastructure is key in some of these township and rural areas. And I probably use an example, and some of you may know the Bridge City Shopping Centre in KwaMashu in KZN. I mean, that shopping centre was a catalyst for transport infrastructure being developed around the area, where there's a railway station that actually stops underneath the shopping centre that transits commuters from KwaMashu all the way to Durban CBD. And then another key factor is that generally our shopping centres that we invested in have very high foot traffic. I mean, if you look at, I'm going to use Bridge City again as an example, just to demonstrate the type of footfall that you can see in centres, and Bridge City itself is a 40,000 square meter shopping centre where we have approximately 1.4 million people coming through its doors on a monthly basis. So, I mean, you can imagine your tenants, are smiling because they've got the foot traffic, and obviously that translates into better revenue for them and probably better rental as a landlord. So we obviously look for assets in that space, and I think the social impact element is quite important in that we always focused on the community in which we operate. So and I'll be honest, it's not you have people doing CSI projects where it's a handout and then you get forgotten as a community. I think we a fund that goes one step above and beyond, where we actually have a platform where we contract local contractors to do work in the center. So we're not, you must remember, when a retail shopping center is up and running, it's got permanent jobs already created. But, there's obviously more, the country is obviously in a bit of a pickle at the moment where unemployment rate is high. So we, 10 years ago, started an initiative where we are, preferring local contractors to do work at the centers, whether it's, installing fencing, security, cleaning, and we're driving that, growth in the SMME space. So again, if you think about it, if you are operating in the space and you are really demonstrating that you are giving back to the community on a sustainable basis, you will get good support for these centers in these areas. So in terms of the performance, Greg mentioned that we were the best specialist property fund in the country in terms of total return on a 3-year annualized basis back in 2017, 2018, and 2019. And, this is what I was talking about, is that, property is a long-term game. And, obviously, despite the challenges recent in the market, we've managed not to erode any capital value. We've had a bit of capital appreciation in the last year or so, and we've had good income returns. But I want you to focus on the longer-term returns, is that, you can see this type of fund can generate a return in excess of 13% over longer periods. So, and if you think about the compounding effect of that over 20 years, it demonstrates how stable this asset class is. Although, I always say it's not directly comparable, because the listed property sector and the JSE consists of many different types of property companies, local and offshore investing. But I just want to show you that over longer periods, why direct property investments for pension fund clients is quite a stable investment. Despite all of the volatility you're seeing in the listed sector, you'll see on a 5-year and a 7-year and a 10-year annualized basis that direct property, especially in the township and rural space, has really outperformed somebody that's actually injected their money onto the stock exchange in property. In terms of pandemic and riot resilience, I think when COVID hit, there was a lot of concerns that people would move away, onto online shopping, and that, and look, it was relevant for urban areas, which I know it has impacted sales. But again, investing in township and rural retail, it's online retail's not evolved, in that space. So, I mean, there's obviously many factors why online deliveries aren't efficient because of geographic, constraints. But what we've done is we've looked at opportunities with companies where, those that can, remember, tech is advancing at a fast pace. So we are getting companies to look at, doing online deliveries where the shopping center takes delivery of the goods, where people from the township are ordering online. So that we still attract that foot traffic to the center. So, I mentioned this, again, a very defensive portfolio. And I'm gonna just skip past this, but Bridge City was one of the centers during the riots back in July 2021 that was completely destroyed. Just to give you comfort and our investors, we were fully insured for the riot event. So it took us about, we were insured for capital loss as well as rental loss. Remember, we investment managers, so we're in the game of knowing what type of risks exist where we invest. And it took us about close to 18 months to redevelop the center into a brand new spec. And concerns from people were, well, will people come back or not? And we back, pre the destruction, we had close to 1.4 million people coming to the center per month. The 1.4 million shoppers are back again. And the reason is that, location matters, and the center's been developed right next to a 500-bed hospital, which is across the road from it. And there's the clinic next door, and there's a regional magistrates court as well. So this is one of our flagship assets in the portfolio, and it's been one of our best performing assets in the fund. So, as Greg mentioned, we're a 7.3 billion rand fund spread across the country. We've got properties in 8 of the 9 provinces. Our last acquisition was the Sam and Tuli Mall, which is just close to 30,000 square meters in Katlehong. It was done through a private placement or a private deal with the owners. I mentioned earlier that I wanted to, demystify the myth that, if you own a shopping center in a township or rural area, that you don't have good quality tenants. 85% of all our tenants in our shopping centers are, big national brands that are either listed on the stock exchange or have a national footprint. You'll see some good names there like Boxer, ShopRite, McDonald's, and many more. And then there's 15% that we have in the center that are independent retailers, and they're often local businesses, and they vary, per province, but we also give opportunities to local businesses, which obviously gives it a local flavor. So if you come up to Mpumalanga, you might have a retailer where we're selling muti and, hairpieces. It varies from province to province. So we do understand our consumer very well, and so we tailor the offering to that. Again, we've got very healthy escalations on our leases. Our leases are increasing on average at 6.5% per annum. So, if a pension fund investor, all you want to know is your income actually going up by at least inflation at a minimum, which, over the long term it has done more than that. And then just to touch on solar and battery, I'm just looking at the time because we don't have a lot of time, but the solar and battery space, obviously everybody's investing in solar given the load shedding issues in the country. I think as I mentioned earlier in my presentation, we've been doing solar way before load shedding started. So, and I think people must remember that solar doesn't give you 100% of your electricity solution. On average, on our portfolio, you're looking at 35 to 40% of your electricity can come from solar. Balance, you're still very much reliant on Eskom or alternative means. But what I want to touch on is that we're starting to look at battery energy storage systems. And, just to mention that why we're able to, we're quite good at understanding our energy consumption is that close to, I mean, on the slide it says 91% of our properties are smart metered. Yeah, it's probably close to 98% now. So we know exactly how much electricity is being consumed at any given point in time at any building on a live basis. And we can analyze that data, including water consumption. So we be better able to control our costs. So what we're doing at Heidelberg Mall, which we own, we looking at rolling out a battery energy storage system. We're expecting the completion implementation date to be around January, February next year. And I mean, the size of that battery is enormous. It's about 3.2 megawatts. I mean, just to give you an understanding, that's probably about just over 300 households can get powered with that one battery, and it weighs about a ton. So what we've done is we've obviously done some analysis to see who are the battery kind of assemblers in South Africa, because, I mean, there's no battery manufacturing happening currently in South Africa. All of the battery assemblers in South Africa are importing the batteries generally from China. And I think the technology is quite important. So we've looked at various battery technologies, and the lithium iron phosphate is probably the best way to go in terms of longevity, safety, less fire risk. And so we've selected, a battery assembly in South Africa called Solar MD to pilot this battery with at Heidelberg Mall. And our implementation partner will be Energy Partners, who are our preferred choice for, doing our solar. So they will do the integration, but linking the solar into the battery. What's nice about the battery system is that, you can actually connect it to your solar, and it obviously can feed in electricity from Eskom as well. So at night, when there's no solar, you can actually draw power from Eskom at off-peak rates and arbitrage it and sell it back to your tenants in the morning when they need it at the peak time, so you make a return on that cash flow. So obviously, it's a big capital outlay. I mean, these batteries at Heidelberg Mall, it's roughly about 40 million rand. So you can imagine our investors would be panicking, thinking, oh, these guys are spending 40 million rand on an asset that is depreciating over time. But we've obviously thought of ways of how we can make a return on that investment. And why it's important is that I'm sure many of you in the property space, that some of your tenants are looking at putting inverters and batteries themselves, but that creates a big fire risk for you as an asset owner. And so if you eliminate that by offering your tenants an opportunity to tap into your battery, there's a single point of risk. And the other thing is that obviously tenants want to trade continuously. So what the battery allows you to do is when you have, for the example, this battery, you can continuously trade for 2 to 4 hours. And the batteries are designed in a way where you can switch off the centralized aircon in the shopping center if you're going to have 4 hours of load shedding, so your tenants can trade. If it's obviously 2 hours, you'd leave the centralized aircon on and will run for 2 hours. So why that's important for us as an investor long term is that, look, we don't see the load shedding problem alleviating anytime soon. Is that we're seeing pressure from tenants that say, oh, I couldn't trade the whole month for a certain amount of hours, I want a rent reduction. With a battery storage solution, you obviously have continuous trading. So you're in a better position as a landlord when it comes to renegotiating those rentals, because you're giving your client a better service. Just to give you this is just for demonstration purposes, but if an average supermarket is, let's say, or biggest supermarket is 3,000 square meters, and you charge them maybe 15 rand. I mean, I'm not saying that's the rate we charge, but it can be anywhere between 5 rand or 15 rand. If you just assume you charge your tenants a 15 rand a square meter and somebody is renting 3,000 squares, I mean, it costs them 45,000 rand to have access to that battery. But if they don't do that, they're probably running a diesel generator that's going to cost them 600,000 rand a month. So it does change the dynamics for a tenant to say, okay, I want access to the battery, but he still has to pay for his electricity that he's feeding off the battery. So that number obviously doesn't include that. But it shows you that, there's a tipping point where batteries now have started making sense for landlords as an investor, which it previously wasn't. And then just to end off, I mentioned the social impact we create. I mean, we've created over 12,000 jobs in the township and rural space. We promote with our retailers and our shopping centers, as well as our own center management staff, to always employ from the local community. So, that number has actually increased from 78% when we did the survey a couple of months ago to 80%. So 80% of all our employment in our shopping centers are from the local community. And that's how we obviously get good support from the community in our centers. And then I mentioned about social impact is that it's not just a handout. So what we've done is we've partnered with companies like Unjani Clinic, where we actually give them space for free, where they offer a nurse an opportunity to actually start a clinic on our site. And all she does is pay us for the water and electricity, and she becomes an entrepreneur where she's running a nursing service. And I mean, it's been an incredible project, and thanks to Imperial Health Group for partnering with us on some of our sites on that. And again, doing social impact, people think it's all fluffy handouts. I mean, we do a lot of recycling on site as well, and it's so important to us because doing the recycling is not only good for the environment, but we get rebates on that, and that money goes back to our pension fund investors, and that's why our returns are as good as they are. I'm not saying that's the only contributor, but that's adds to value for our investors. And that's it from me. And I just want to say thank you to High Street Auctions for giving me the opportunity to present to you today. And I know they brought some great retail assets to the market, and as Greg said, I think on one or two assets, I think it was a ShopRite Checkers corporate disposal. We did maybe bid on one or two assets. We lost out because they obviously got a good price for their seller. But yeah, I believe there's some good assets coming up on auction over the next two auctions. So yeah, I'll just say thank you very much.